income processing. Income processing basically when the fund invests into the variety of the debt instruments, right? Variety of debt instrument, so that interest payment debt instruments, when the fund invests into debt instrument, that every debt instrument carries some certain amount of interest payment itself. Let's say bond that carries 10%, 5%, 6%, 8%. It carries certain amount of interest payment with itself. And that received maybe on a quarterly, annually, monthly, yearly. There would be types even, simple compounding. That is not a part of our discussion because that comes under the valuation, but that we should know whether it is a compounding or it's a simple, because that all comes under the income processing. As an income processing team, what we do, because a particular security is already in the system, and that's what's the main job of trade team. The main job of trade team is to book the instruments in the system and to settle it. And after settlement, right, once the particular instrument serve the period, then that instrument will accrue something. And what would be that something? It means something means it's an interest payment, internal rate of return, and that internal rate of return, corporate action income processing team, or you can separately call like income processing team, will process it. Interest payment, and this debt it means including bonds and loans and even debentures, right? If a government announce that the debt instruments, then we call bonds, and if a private companies offer, then we usually call debentures. That's a difference. Means in this way you can keep in mind what is the difference between debentures and bonds and loans. So here it would be the term loans or business loans. Term loans, they issue with the terms, and the business loans again, the companies, non NBFCs or banks, they offer loans to the businesses. And apart from that, uh, term loan and real, if private. Debt instrument. Every funds, even in a normal business also. Let's say retail investor, they invest directly into these instruments, then they will have to process the income processing or process the interest payment for the retail investors also, right? So this worked at a different levels. If you join any broker, then you will have to process the interest payment to the all the investors like me. Because let's say I have invested into bonds, then you will have to process that interest payment to me directly. If you join any fund house where you don't need to process anything, because they accept interest payment, they accept dividend. So it means they validate the corporate action. Are you getting me? As a fund, as a see, we'll discuss that part also. What would be your responsibilities as a corporate action analyst with different funds? Okay. So the debentures, If a private company offers that instrument that called we call as the debentures and the bonds, when the government announce, then we call bonds. Okay. And apart from that, the another term also you may see, which is loan syndication. Loan syndication is nothing but, so more than one institutions they will offer the loan to the business instead one. Here the only one, here the only one, let's say a company or a bank will offer the loan to the XYZ project. But here to the, let's say the project name is Z or company name is Z. So A, B and C, three company will means collaboratively offer the loan facility to that particular Z company. Here the bank can reduce the risk. Definitely there will have an impact on the return, but for a bank is the risk would be in a prime focus. Right? Instead means solely offer 1 CR. So why can't we collaboratively offer 33.33 crore each to the project? And that happened. So when the banks collaboratively offer loans to the project, so that loans they call loan syndication. Syndication it means the body, right? Loan it means again it's advances to offer advances facility to the companies. But syndication it means to offer the loan in a team, right? So at one side there would be one, two, three, four, five banks, and at one side there would be only one institution who is looking for a fund. If they offer loans collaboratively, that collaborative loan we call loan syndication. Sometime you may expect question on this, what is a loan syndication and all? Because why I'm discussing all this? See, all these instruments provide attractive interest payment. And where the interest payment comes, there you can see the income processing part. Right? Where you see the debt instruments, because all that comes under the debt instruments. There you can see the income processing part. And as I mentioned, if you have a traded, if the fund had already traded the security and that the security is settled or the fund is holding at the quarter end, then we received payment instructions to process the interest payment on that particular security. And as a processor, as a corporate action analyst, what we do? There is a process called, first of all, we'll discuss that process also. Which one is this? Right? So Dex team, here you can see the structure. Dex team, what they do, they book the trades into the system, or where you can see the trade processing team, right? They book the trades and they settle the trades. That's their daily routine activity. We have discussed under the trade processing of the particular hedge fund, right? They also book means under hedge fund also or mutual fund, private equity. What they do, the trade processing team they book the trades into the internal accounting system and they settle it. Correct? If let's say there is a team E team who book the trades into the system, right? And you're holding XYZ securities, so we'll pull that report. Then we'll have an idea exactly. Already, I think I have it. Okay. So let's say these are the instruments. Ahmedabad Municipal Corporation, Axis Bank Limited, right? I'm on a mute. What happened to my... Hello? Okay. So these reports you can pull, right? Because all the, let's assume it, all the securities are in your system and those are already booked. Then, as a corporate action analyst, what you can do, you can start to do the research on your securities, where you can see the structure. Your corporate actions process can be divided into few pieces of processes. Let's say trade booking, then the research, event setup, instruction management, maybe deadline management, payment processing, risk resolution, right? That can be the structure, because with a few institutions I have seen that, where you can see the end to end, front to end model, where the one associate will work on entire things, and vice versa. With a few institutions I have seen where the one team will work for a research, one team will work for a event setup, one team will work for a payment processing. Okay, this depends on their organizations and their different operation strategies. That is not a part of my discussion, but well, you can see the structure in such a way also. But let's say you're the associate who's gonna process everything from beginning to end. You have booked the trades, as we have discussed about the booking process, and later on there was a notification that the Ahmedabad Municipal Corporation, they have announced the interest payment. Then what you can do? You can check the record date. Where you can check it? Search that information on a stock exchange, let's say NSE, BSE, NYSE, London Stock Exchange, New York Stock Exchange, Nikkei. Means that's a mandate provision. So companies should disclose all the information on a stock exchange. Why? Because they can publish that date on their site, where accordingly investors can do the plan for investment. Correct? Otherwise, if there is no record date given, then how can you trace the securities who are entitled to get the benefit of this interest payment? How can you trace the shares who are or which are entitled to get the benefit of a corporate actions? Could be dividend, DREAP, cash and stock, merger, acquisition, return of capital. There would be many more. So how can you trace that? That's the reason date rule come into picture. Companies will pay the dividend as per the recorded. If your name is in the books of company on a recorded, then company only pay the dividend or interest payment to those holders. Apart from that, you think it's your business. You should have to check the date. You cannot claim if your name is not, let's say you're holding the securities of Ahmedabad Corporation, but on the record that your name is not there, or your fund name is not there, then you cannot claim for a dividend or interest payment or any other corporate action benefit. You would have seen the date, which is already published on the stock exchange, and they will send the notifications to all the bond holders or the equity holders, depends on the corporate actions, to please verify and validate this date and data that we are going to pay the interest payment to you on this particular record date. So you should have a positions on before this record date, then only we would be paying the dividend to you or interest payment to you, vice versa. And we are discussing for both equity and bonds. For equity, the date would be, the very important date would be X date. Before X date, it's a mandate to have a position with you. So you can say X minus 1. Yes, of course, entitlement date, ownership date. You should have ownership of securities before the X date. So it means funds should hold the securities before the exit, then only you can claim for a dividend and other corporate action payments or other corporate action events also. And then the rule applies to the corporate actions. For bonds, you should have a positions on a record date on or before the record date. And for equities, you should have a position or ownership of a securities on, or I would say before the record date. So it means on and before the record date. And if you have, that should be settled on or before the exit. Then only your positions would be entitled to get the benefit of a corporate action. This rule will apply to all the different types of corporate actions: mandatory, mandatory with choice, and voluntary. There are only three main categories: dividend, that comes under the mandatory, and if the dividend is offering any choice in the currency, then that we treat as a mandatory with choice. Okay. Annual general meeting, it's a mandatory one. If you want to participate, participate, but there is no impact as such on the holding and all. But that also still comes under the corporate action. Split, face value split. It's a split, share split. This is a mandatory one. This company looking for a split of shares value into, let's say, 10 into 5 rupees per shares. So almost you're gonna receive two shares. So old shares will replace, new will add. Right. All this information should be there on the site of stock exchange, as well as you can cross verify this information with the Bloomberg and Reuters and any other data provider. Am I right? Okay, so they verify, so you guys can verify this information with the Bloomberg, because most of the companies, they allow Bloomberg as a valid source of information, and most of the companies, even they're against of a Bloomberg information as well, they don't follow it. They only follow the stock exchange notification, custodian notification, agent bank notification, and the issuer and registrar notification. That's it. Why? There is again argument, and that depends, that's their individual decision, right? Let's say I'm a Morgan Stanley, I'll follow the only the registrar information as a confirmation of that particular corporate actions. I'll not check the Bloomberg, but JP Morgan they allow, BNY they allow. There are other institutions, NT and all, they don't allow. So we don't want to fall into this discussion, but yes, you can cross. Again, I went on mute. What is happening? This. Okay. Okay. So let's say now you are holding all the securities. Then what you gonna do? The research team. They work on a research part to visit the stock exchanges, to visit the company's portal, to visit the Reuters or the other Bloomberg sites, verify and check the information on such portals, get the snapshot, prepare one checklist or Excel sheet, right? And in a corporate action cases where you can see the MT564 as a notification of announcement of a corporate actions, so all that information you can send it to the event setup team, or else you can set up also. Event setup, it means nothing but you will have to create a event by inserting the details like if I have that notification, this information: ISIN, CIDOL, QC, country of issue name, country of origin, tax code, MIFID. It's a regulatory reporting part. If you see the yes, on a MT564, we don't actually process that corporate action. So that event will be processed by the higher management and all, because there is a standard procedure which is given for that the MIFID indicator. At a process level, you cannot process it. Then the market type, trade date, record date, ex date, corporate action type, currency, transaction currency, dates, entitlement date, ex date, recorded. All the information is very important. Without that, you cannot set up a corporate action event, because all this information that you require to input in the system, so system will create a event for a different corporate actions. But for a bond payments and all, you don't need to create anything, because security will be already set up in the system, right? So where you just need to accept the payment. But with a few institutions, you will have to still create the interest payment event, where you can input all these accounts which are entitled to get the benefit of that particular interest payment. So you can create the accounts, allocate the currency and the payment, you know, and set up this accounts where the payment processor can process it, means accruables that the bond or the funds and all the institutions this carry as accruals. But the processor, once the event setup team create a interest payment event or the corporate action event, this the event setup team, they can hand over this event to the payment team. Or else if you are working on a front to end model, so you can also on a payment date will be defined or already disclosed. On the payment date, the agent banks will send the notifications to you that yes, we have processed the payment. The notification will be in the same format, right? But that you can take as a confirmation of payment or proof of a payment, that the payment has been received to the fund account. Fund account, it means there would be a firm account, so that the fund you have received, so you can process the payment to all these counterparts, and then you can release the payment instructions to the agent bank, so then change the status. Payable. Once you change it and once you hit on the button, so that event will pay, event will release. Even it could be your interest payment, depend that the it could be for any corporate actions, mergers, acquisitions, uh, stock split, reverse split. There will be so many events. So then your payment would be released. But yes, for a different corporate action events, the process may vary. If it is an interest payment, there would be very simple and plain process. Just follow this, validate the recorded positions and validate the payment notifications that you will receive on a payment date and process the payment. But for corporate actions, we have a different structure altogether for a different. If it is a mandatory, pure mandatory event, there would be similar process. And what are those mandatory events? Split split, it means the division of a shares. Division, let's say the the face value of a shares is 10, but company want to split the shares into 1. Means company want to split the face value of shares now into 1. 10 rupees face value will be split into 1 shares. 1 shares, 1 shares. If you're holding 100 shares with the face value of a 10, so what would be your value? Which is around 100. But after the stock split, the value will be again remain same, because the number of shares should be increased. right? Here, let's say company decided to announce corporate actions for a one for a for a for one security or for a one shares that you will receive 10 shares, almost 10 shares, right? So you can multiply into 10. So you will receive 1000 securities with a value of 1. And if you calculate this, there won't be any change. 1000, 1000. Even though your market value of a shares will be corrected automatically. Are you there with me, right? Because you are so silent. So eventually, for a split, the shares value will be changed. Let me put it. Shares value will be changed, but here definitely you may expect questions. If a company announced split, will be there any impact on NAV of a fund? Would be there any impact from a valuation standpoint? No, right? And then same applies to the reverse split also. There won't be any change. Reverse split, it means to reverse the position. First case, to split the positions or to increase the number of shares, and in the case of reverse split, to decrease the number of securities. In both the cases, the reason will be vary from event to event, company to company. If you take the example of MRF, the MRF stock price is very high, 60, 70,000. Nobody can, means generally the retail investor, they cannot afford it, right? And if we look to that, so we can expect the stock split in the MRF, but still they don't want to split the share price. So we cannot say that why they are not offering split and all. Simple, depends, because most of the companies, they don't want the retail investors. If the retail investors invest sometime, there would be difficult to get the sustainable capital for a business, and vice versa. If the price of a security is very low, and let's say the security price is not getting appreciated since last couple of years, in that case you may see the reverse split corporate actions. Reverse split, which is nothing but to consolidate the shares price or to consolidate the number of shares. Let's say 10 shares will become now 1 shares, and the face value will be changed from 1 to 10, but the valuation would be remains. And in a system also, what we do, if a corporate action, this split or reverse split announced, so here you can see the replacement of shares as a processing perspective. What we do, replace, it's a replacement. Why replacement? Old shares versus new shares. So it means the old shares with the value of that, the 10, 5 to whatever it is, will replace that by the new shares with the new face value price. The shares comes under category of replacement. And the process of a reverse split and stock split would be same. It's a very plain process. A research team will receive the MT564. Then they can verify it and send that instructions to the event setup team. They can set up the events on the basis of positions, whatever that if the fund is holding or if you're holding. And if depends where you are working. If you're working at a custodian level, you can directly process. If you're working at a broker level, then you will have to create the event and then you can process it. And For a corporate actions, we always consider the recorded positions for a processing. But there you can see the exception, which is there are two types of market: recorded driven market and exit driven market. If the market type is exit driven, then we'll have to process the positions as per the exit. That will be defined on a MT564. That's how you need to verify it. That's how payment team come into picture. After that, the post investigation come into picture. But see, as a processor, payment processor, you will have to process the payment as per recorded. But after that, you can do the claim process where you can verify the positions and market types, and accordingly you can initiate the claims and reverse the payment and all. So that entire things come into picture where once the process the corporate action event. Yeah. We consider the exit position. See, the rule is very simple. If you're holding the positions before the exit, so it means that should be exit plus 2 would be recorded, T plus 2, traded plus 2, settlement date. It's actually settlement date. That should be settled. And if it is settled, then company is obliged to pay the dividend to you or any corporate action benefit to you. And if you are not holding, see why this happened, I'll tell you. SBL activities, stock, loan, and borrow. If you lend the securities to someone else, and let's say on a record date that the particular person's name is getting reflected in the books of account of a company, then as a corporate action processor, you will have to process the benefit to that borrower of a securities. You won't have any other option. But post payment, you can initiate the claim processing where you can reverse the payment from the borrower's account, and actually you can process or reinitiate the payment to the.
You are right.
Just a minute. So you can reinitiate the payment to the original owner of a securities, right? And this applies to all corporate actions, even including in that the bond interest payment also. Because see, sorry, can you repeat? Here, nothing like that you need to adjust and all. Simple, you need to process it.
You are
Replace the
unmuted.
old shares. Sorry, it's my, there is a something problem in, sorry, it's the mic is getting, okay. It's a replacement. Already the old shares that the company credited to you, but that old shares now the face value is getting changed or going to change. So it means the old shares will be outdated. That company will have to dispose. So in short, the debit that securities from the investor's account or funds account and credit the new securities with the new face value. Are you getting me? This happened. So processor will replace the shares. Will receive the debit instructions as well as we receive the credit instructions. Because against debit means your security already would be in the system, that the system security will be debited and that will be replaced with the new securities. So that would be credited. So it means we'll receive credit securities and debit the old shares will be that the reduce or will be zeroed out. So that you need to move. So the company will take back that old shares. And as a processor, we do means debit the old shares, credit the new shares to the investor, different investors account. And how you can do that? You don't need to do anything. Just update the ratio. System will automatically calculate this, right? See here, currency or amount that you can say credit new shares, debit old shares. If you update the ratio, let's say 1:1, system will float at this. For every 25 shares, old shares will be debited, new shares will be credited. So this would be depends on the ratio. 1 is to 1, 1 is to 10, 1 is to 20, 1 is to 100. That depends. And let's say if you are working at a northern trust at a fund level, and definitely here, let's say you have received a corporate action payment and you're working on a NAV part, or corporate action, you're the part of corporate actions, then you will have to validate the payment. So once the corporate action process the payment or processor made the payment, then you will receive the notification that the shares has been credited or debited from your account, or something activity happened on the particular securities, that you will receive the notifications from the custody side at a fund level. And then after you start to do investigation, okay, what happened then exactly? Okay, so corporate action happened. And then later on, if you check your positions, so there would be a report, or else you can directly check the positions. Number of position has been changed. And that positions you need to record in the fund accounting book, because that would be your assets, right? So the balance sheet that you need to update. So this is how means you can link this corporate actions processing payment where, and if you worked at BlackRock, again, this is a fund, you will have to do the reconciliations or do the records of 40 old securities against 40 new securities in the books of BlackRock. This process, you can say validation or corporate actions process or booking or accounting, whatever that you want. All right. And again, the key information ISIN, SIDOL, QSIP, currency amount. This applies to the bonds or any instrument that is required to process a corporate action events. Okay, and here you may expect questions on what is the difference between split and reverse split. So you can define that. So reverse split, it means consolidation of securities, and split means division of securities or division of face value or consolidation of face value, right? And if they ask questions, would be there any impact on NAV? No, because it's just the internal movement. Correct? Then what about the stock dividend? Instead, cash company can keep the profit with themselves and they can distribute the dividend. It means securities to you, and that would be a free of cost. If you're getting anything free of cost and on and above your investment value, there would be impact on NAV, right? Because extra shares that the fund will receive, everything that you can try to link with the fund, because corporate action is one of the critical process where you may expect 2 to 3 questions in a fund accounting interview. Correct? So where, see, the logic is very simple. If you see, due to the action of a corporate actions or event that you can call, due to the event, if there is any impact could be or should be, there should be received something without paying anything, then there would be impact. Let's say dividend, DREEP, CSO, stock dividend, bonus issues, there would be positive impact. You're going to receive something that will add in the assets. Your assets will be increased. So eventually, once the asset increase, then that will have a positive impact on net asset value of a fund. But in terms of stock split, reverse split, merger, spin-off, there won't be any. If A company merge with B company, see, in that case, the shares will replace automatically, right? So once they merge, then their valuations, everything will merge, and after then they can release the new shares to the shareholders. But that doesn't mean they will offer some extra discount and all to the shareholders. No, the face value of shares will be changed or would be remain same. That is depends on the company's policy after the merger, and accordingly they can issue the new shares with the name of ABC Limited. Before that, there would be only A Limited or B Limited. That happened. Spin off, it means if the company want to, we can take the live example, which is Reliance Industries. If tomorrow Reliance Industries, that is your market or mart, if they list that securities on the stock exchange, so it means or let's say if tomorrow they announce the geo or telecommunication business, they were in petrochemical, but recently they took the spin and enter into telecommunication business. And if they list that telecommunication business on the stock exchange, so it means they're separating or creating the separate entity from the parent company. So that event we called spin-off. But there won't be any impact. Let's say you had a security with the Reliance Industries, but now they have offered if you want to go ahead with the Geo communication, so you can go ahead with that. That's absolutely fine. The valuation will be adjusted and the securities will be sent to you. Let's say you had a 1000 rupees securities. Post spin off also, the value of a security would be 1000 only. See, from a processing point of view, the spin offs, bonus issues, dividends, stock split, those are like very simple to process. Research team will do research, event setup team will they set up the events, payment, and then they will hand over that event to the payment team, and payment team will on a payment date they will receive notification which is MT566. They will refer it and they will process it. There is no any other process that you need to follow. Okay. Here would be one questions: what is the difference between right distribution and bonus issues? Rights that the company offer to the existing shareholders to raise the new capital or fresh capital. Are you with me? Right distribution, it means to offer the rights to the existing shareholders. So company can, if you participate, then you will have to pay the money to this particular that the company, then company will raise the fund. But what about bonus securities? If yes, it's optional. Nobody can force to you. That depends on it's a voluntary action. But here you may expect comparative question, right distribution and bonus issues, or right issues or bonus issues. And bonus issues, it means that would be free of cost. The company can issue the securities to the shareholders. But if a company want to utilize the cash from the capital reserve account, if there is, let's say, free cash is there in the company's capital account, and if company want to utilize that cash for their investment purpose or business purpose or expansion purpose, then company will have to send or issue the bonus shares to all shareholders, and that is a benefit of a shareholders. But eventually that the value the cash value that company is going to utilize, ideally those are not a free of cost. If you look from an investor standpoint, those are not free of cost, because eventually after bonus issues the market price of a shares will be corrected automatically. After every corporate actions, you can check on the stock exchange platform as well, the shares prices will be declined or adjusted or consolidated. Consolidated, it means it will reduced and adjust it. Because now company is going to use that or spend that cash. They have just sent one or two securities or bonus issues to you. That feels like, yeah, it's for me, it's a bonus because I don't need to pay anything to you. Of course. But eventually the value of that particular security is company want to utilize. They will take that value and send the one document or piece of paper to you as a bonus securities. Keep that with you. But yeah. So you can highlight that point when we say comparative question on it. And from a processing point, so one point would like to add in both the cases. If it is a bonus issues most of the time, those would be non-tradable. By nature, those would be non-tradable. From a processing point of view, so this doesn't matter to the fund accounting team, but corporate action payment processing team, they actually create a mandatory exchange event after the bonus issues, and where they convert the non-tradable bonus shares into tradable. Convert, it means simple, just debit the bonus shares and actually credit the new securities, which would be in a common equity form and would be easy to trade and buy and sell. So where you can transfer that security directly to the demat account of a holder. Simple. But for a fund accounting team, what the matter is bonus issues, stock payment. Simple. So after bonus issues, you may expect mandatory exchange event, and the same applies to the right distribution. Rights will be issued on a dummy line. So it means it's just an offer, right? That you don't know how much people that are going to subscribe or participate in it. The same applies to the IPO as well. They offer IPO on a dummy line. Just they create one ISIN and they offer the IPO on a dummy line, and they accept the applications or the interest or the request from the investors. And if they received, and then they validate all the request. So that request validation part we called subscription offer. After right distribution, there would be subscription. And after subscription, one more event which we required, because rights should be on a dummy line. So you required assimilation event to convert that the rights into common equity. So event setup team will create another event and they will send it to you as a payment team. You need to just process it. Simple. You're going to receive the notification as a payment notification from the agent bank or the underwriting agent like investment banks. And then you can process it in your system and convert that right. So it means debit the old rights and credit the new common stock, which can be easily tradable. Simple. Rights, subscription, and assimilation. It's just a type of corporate action events. Those are technical words, but still, that would be there in the corporate action process. Okay. So the voluntary events, that is buyback, tender, merger with elections, return of capital with elections. Buyback, only issuer company can announce buyback. Recently, if you heard, the TCS announced the buyback. They buy back the securities from the market, open market, with the price of rupees 4,500, and the market price of security was around 3,500. Do you know this buyback event? When the TCS announced it, there was a gossip in the market that they're paying very high amount. But try to understand the terminology. Their budget was around 18,000 crore, right? And they were issued the notifications who is holding minimum 20 shares can buy back. So company can buy back one share. So it means the ratio was 20 is to 1. This is a very important from an investing point also. So it means, let's say you're holding 20, you cannot surrender all the 20 shares to the company. There would be a standard ratio. Might be company can increase and decrease this ratio. Let's say 50. For 50 shares, we're gonna buy back the one shares, and that is with the price of rupees 4,000. Market price of the securities can be different. But due to this buyback event, honestly, there won't be any impact on your or the need asset value. Company is buying back one security, but they are paying 4,500 for one security, right? So you're getting the value of your investment back. Simple. So as simple as that, there won't be any impact, and there would be again, but would be very slight impact on any net asset value, because the book value of a security is, let's say, 3,500, but you're getting 1,000 which is extra, right? Let's say you're holding 50,000 securities, so almost for a 51, it means 5,000 shares that, so your fund can participate in the buyback event. So the 50 almost extra amount that you're going to receive, which is this, and that there would be slight impact on a net asset value as well, because the book value is less than the market value or the price that you're going to receive from this buyback event. Okay. Mhm. Capital gain, you can say capital gain. Yeah, would be, you can treat as a profit. This is a part of corporate actions. Okay. So corporate actions process, the teams they process buyback, and income processing they only process interest payments and redemptions of bonds. Simple. If the if today, let's say today is the expiry or maturity of a bond, then you will have to redeem it. So you will receive the instructions for redemptions, redeem it. Maybe partial redemption, maybe fully redemption, and the interest payment. Every quarter with the income processing team, you can see high workload, because on a quarterly basis we receive lots of interest payment notifications, and that will have to process it, and as well as redemptions request as well. But the this voluntary and all these are the corporate action types. Corporate action types, where as a corporate action analyst they will process it, but that we should know what is the terminology behind this buyback and all. Here you may expect questions, right? Maybe, let's say you're holding 50 shares, so can you participate in buyback and surrender all the 50 shares? No. Then all people will participate, because the company is going to very high amount to us, which is 1,000 extra for per securities. And vice versa, if the why company will announce this buyback, if the company want to reduce their outstanding liability, right, they can do this. Or else, even if the company want to increase the company's percentage in the business, then in that case also they offer it buyback. Okay. What about tender? Tender can offer by any or announced by any event, any company, any other company. Tender can offer, or even you can also announce if you have a that the uh, defined limit, or if you are eligible to offer, then you can also offer that. Price, everything would be remain same, but instead issue a company, any other company can announce this tender event in the market. And why they will do this? See, the big companies, they always target to the small companies. Let's say I'm a very big company, you are a small company, and you are in my business, and we are crossing the path of each other's. Then I'll request you to merge your business with me because my share market share getting impacted due to your business. But you're, let's say, you don't want to merge with me. Again, every company, they will have their goals. Accordingly, they do the business as well. Then what I'll do? I'll issue the notification in the market that we are buying the security of a XYZ Limited with this particular price band. And then shareholders will participate. Then you can pay the payment to them, get the securities in your account, and then I can claim, yes, I'm holding 40% rights. Now then I'll run this business, get out of this business. This happened. So this comes under tender processing, and the corporate action analysts, they do process the tender. Simply here with the buyback and the tender, security will be credited to the issuer, and cash will be, and the same security will be debited from the investor's account. Same applies to the tender. Same applies to the merger with elections. Merger with elections, nothing but, let's say, the A company's investor and the B company's investor. There are, let's say, 100 investor. 50 are okay with the merger. 50 are not okay with the merger. Then same vice versa situation applies to the B company as well. Here, let's say 75% investor are okay with the merger, 20% they are not okay with this merger. Then both the companies can offer what? The merger with elections. We'll do the elections. Let's say if you're not interested with this merger, then you can cast your vote. So accordingly, what we can do? We can pay you cash, market cash, or valuation amount, whatever would be. We can pay back to you, and we'll debit your securities. That's absolutely fine. So that activity we called merger with elections. And if there is no merger with elections, let's say all the shareholders are okay with the merger, then that would be plain merger, that you can treat a mandatory corporate action. This all comes under the voluntary. Fund accountant, see, if the fund participate in the any of the events, let's say buyback, tender, or merger with elections, you're gonna receive cash, and the security will be debited in the percentage of, let's say, 20 is to 1, maybe 100 is to 1. You need to verify that and check it. Exactly, that security only should be debited, and the cash, whatever was there, the ratio, in a ratio of whatever it is, that should be credited, and that should be there, because that is required to do the accounting. So your cash balances will increase, cash inflow will increase. Okay, the same applies to the all the events also. By that we should know what is merger with elections and all. That's the reason we are discussing, because in an interview, definitely you may expect questions on what is the return of capital with elections, what is merger with elections, If they schedule elections, then it means investor they can participate and cast their vote. Let's say I'm not happy with the merger. I don't want to continue the merger. Please return the fund back to us. We are ready to credit or give it back the security to the company. So that process called merger with elections. And return of elections, sometime there would be regulatory requirement or preference shares, or sometime there would be preference shares. After the maturity, you need to return the capital to the investors. And this happened in case of common stock as well as preference shares also. You can see the return of capital. If it is a return of capital, that would be mandatory. And if you see the word which is return of capital with elections, it means that would be voluntary. Why voluntary? Here, so company can announce the elections. Hey, we want to this initiate the return of capital with election event. If you are interested, so you can submit that. Otherwise, we'll bring up with the another plan which is return of capital, and that would be mandatory. Then we'll decide. We'll come up with the ratio. If you're holding 50 shares, then we'll ask for a 1 shares that you need to return to us. And let's say you're holding 50 shares, and if you vote for 1 shares, that company can take back the 1 shares against your 50 shares. And even though you want to receive the cash consideration, whatever standard would be, but investor also can surrender, and even the company can also initiate the action. Simple. So that treated as a return of capital. Okay. Processing for all would be remain same. There won't be any change in it. This was all about voluntary events. The very important one is mandatory with choice corporate actions. Let's say company want to announce dividend in a GBP currency. But apart from that, if the company is offering the same benefit in other currencies as well, so that event we treat as a cash dividend with a choice, where the investor has a two choice. One, they can ask for a payment in GBP as well as they can ask for a payment in EUR. Okay. In case of DREAP, dividend reinvestment plan, see, to offer a dividend or to process a dividend which is mandatory to the company. But if they are saying, why don't you invest that dividend in the same company, so we'll process the stock to you? If that happened, then that event we call as a DREAP, dividend reinvestment plan. So dividend amount that investors can invest in the same company stock. And cash and stock option. Here, company can announce cash and stock option, so where you can participate for any of the options, right? And accordingly, processor also means this actually work will be done by the instruction management team. They actually send a notification to the investors for a choice that we have there's two choice available, stock, cash, maybe cash in a two currencies. Then investors will confirm, right? If you're working at a fund side, then and let's say you're a part of corporate action team, then you need to confirm that. So if let's say the company announced dividend and they have a two currencies, and your local currency of a fund is UR, so you may ask to process the payment in UR, right? Then the dividend corporate action analyst will set up that payout for your fund as a UR, and they will process that payment in UR. So after receive the payment, you can do the reconciliation, right? Similar way, You can send the instructions. All these instructions you don't need to send anything, just you need to validate, because this is like a management level stuff. Your fund manager will review and check the instructions and notifications, and then the fund manager will confirm to them, hey, yeah, we are looking for your payment, we are looking for a stock, we want to invest in your company, we want a stock payment, not a cash. They will do the evaluation analysis of a business, and accordingly they will take the decision. But as accountant, it's important that what the benefit that we have received, accordingly that will record in the books of fund. Make an entry, yes, we have received cash dividend, add the cash dividend to that particular securities and update the dividend to the P&L. Same applies to all the securities. All right, any doubt, guys? Okay, so voluntary events. So deadline team, which can they work, right? And for a mandatory with a choice where instruction management team work. But if the front to end model is there, then you can also work on it. And it's a process where actually you are interacting with the investors and getting the choice from them, and accordingly you are updating that options in your system, so the payment team can process to the payment accordingly. And same applies to the voluntary events. Deadline teams will set up a deadline. Let's say that date we call like offer start date. Offer start date is today and offer end date is tomorrow. So by tomorrow's market close time, that you should have all the instructions from the shareholders. Otherwise, let's then you can assume it the shareholders, they are not interested in your offer, right? And if they are not interested, then that's fine. You don't need to take any action. And if they interested, then they submit it, and accordingly you can evaluate their positions, and you can update in your system as a deadline analyst. Check, because they will send the mails to you, so you can review the each email. Let's say I'm a hedge fund manager, I have sent a mail to you, I'm holding 100 securities, right? And if the ratio of the the buyback is like 50 to 1, so it means for 50 securities you are buying back one security, then you will buy back the two securities, because I have sent the instructions. Yes, I am interested. The BlackRock is interested. Can you please process accordingly? And we are holding 50 securities. You will check the 50 positions in the system. That would be in the demat account of that the particular company, and accordingly you can process it. Two securities you will buy back and process the cash payment to it, right? But for that, to get the notifications or confirmation from the investor, there should be a specified time, right? So that time we called offer start date and offer end date. And even though you can say the expiration date as well. This applies in a mandatory choice as well as voluntary events. Both the set up this expiration date. Before that, you need to submit your choice or preference. Here also, let's say the default option is GBP and available option in UR. Buy and date, if as an investor, if you don't take any action on it, then the company or the corporate action analyst need to process the dividend as per the default currency. So it means they will process the payment to in GBP. Simple. For every event, carry the default options, and they mention in the notification as well, if you don't submit your choice or option or participate, then your offer will be lapsed. And in case of mandatory with choice, your payout will be default pay option. This applies to the interest payment as well. If they offer any choice, let's say GBP, USD and all, you need to submit that. If you don't, then they will process the payment in default currency. Simple. Sorry. A deadline expiration date, you can say. So on expiration date, your deadline will be over. Then after that, you can start to feed all this data into the system, right? And then there would be your X date. Eventually, your X date would be the expiration date. Yeah, and sometime they can also mean set up the ex date would be different, and this offer ex date and expiration date would be different. Almost 1 week time that you will have to, as an investor, then you can submit, review, and submit. Ex date, let's say, would be 19th of May. Up to the expiration date on 18th of May on ex date, then you can start to do the validation of a request that you have received, and accordingly you can update that into your system. And before the sorry, after the record date means you will have a time from till X date to record date, right? After the record date, you can send that event to the payment team or corporate actions team. Then you need to hand over that. Then the corporate action payment team will take care of further part. Payment team's responsibility is to accept the payment which they will receive via MT566. They will have a structure like prepayment, payment, and post payment. Prepayment, which is something. See, once the, let's say, if you take the example of instruction management, they will set up, they will means update the positions and update the events as per the preferences that they have received. After that, after the record date, they will hand over this event to the payment team. Let's say on recorded plus one date, then payment team will, they will start, let's say payment date is today, so yesterday they had to review all the positions and balances and find out discrepancies and all. And let's say if the payment date is tomorrow, then we need to verify the payment for all the that the instructions or the event setup event in the system. You need to verify all the details in the system on a prepayment date, and you can match with the MT564 on a payment date. It's a simple process. You will receive the notifications from the agent bank that the payment has been credited or debited. Accordingly, you can take the action. It means to process the payment. Now you can release the instructions. Right. So once you release, actually payment will receive to the funds, hedge funds, retail investors, and to everyone's. And a post payment, which is something to check it so that the payment should be correctly posted to all the shareholders and investors and funds. And the risk management, which is something, let's say you're working for a that the BlackRock fund. So corporate action analyst is saying from a custodian side, they have processed the corporate actions, but you haven't received the payment. Or let's say the payment received, which is very less. So that comes under the risk management. Let's say you have received the stock payment, which is very less, then you can do investigation as a accountant or corporate actions fund accountant. You can validate that and escalate that matter to the actual means custody corporate action analyst. So they will review it and they will confirm it to you. Maybe sometime if it is a cash payment, then the tax rate might be that applied. That's the reason you have received payment. Maybe check fees applied, maybe transaction cost applied, maybe conversion applied. That's the reason you have received a lease payment. That also happened because it's a normal process. When you transfer my fees to me on an annual basis, you can see the bank, they charge fees to you as a transaction fees, consolidated transaction fees. Whatever transactions that you made, they apply transaction fees to each transactions. The similar way here also applied, and that's the reason you have received lease payment to you. And where you can see the discrepancy. Let's say you are waiting for 100 GBP, but you have received only 95. 5 GBP or dollar would be short, or 4.5. Validation, it means after process the corporate action, fund accountant analyst, they do the validation of a received payment. And if they see any discrepancies, they escalate to the corporate action team. Very simple. As a fund accountant, your job would be to escalate if you see any discrepancy in the payment received. Or on a Bloomberg, you are saying different rate, and the corporate action analyst, they have processed dividend or interest payment to you by different rate. In that case also, you can escalate that matter to the corporate action analyst and ask them to take the proper action on it. But in a fund accounting, your role would be to validate the received payment. And with the in fixed income processing, where actually we accrued interest payment throughout the quarter, so that the accrued interest amount should be matched with the received payment. Because throughout the year, what the accounting entry that we prepare, or throughout the quarter, what we do, accrued interest account debit to interest account, right? And once you have received accrued interest, then cash account debit to accrued interest. So it means if, let's say your the fund is accrued 100, so it should be received 100. Let's say your accrued, which is this one 1000, and you have received 999, then your account won't be able to match in the system. There would be difference on the payment date. Once the as a corporate action analyst or fixed income processing analyst, they have processed the payment to you, and after that you have received a payment, and that the received payment, the cash, which is something different from the accrued interest amount, then you need to investigate that. In accounting, make sure that the debit should be matched with the credit. Entire game is depends on this. Whether you work in fixed income, corporate actions, fund accounting, anywhere, the game is all about your debit should be matched with the credit. And if it is not, so it means there has been something happened. Here in this case, your debit would be less, credit would be high. You won't be able to match the payment even in the Recon system as well. Even the fund accounting reconciliation system, they will escalate this matter. They will pick it. Hey guys, we have received cash transaction or wire payment, but that is not in a line. So can you do investigation and find out what has been happened on this particular transaction? Because in our system, we are seeing the 1000 as interest payment that we are due to received from you, but you have processed only 995. Why? There is the difference of $5 or ZBP or INR. Yeah, so it's, and that's the reason they have a process in a corporate action like break resolution. They will have also break in their system, but they are processing corporate action payment for a 2000 accounts, 3000 account in one go. So it will take lots of time to resolve that break. But for you, against as a fund accountant analyst, against your positions, do the investigation, write up or draft a proper mail to them. Then they will easily, they will have an idea. Yes, so it means we have missed the process payment for this particular, might be when you are as a corporate action analyst processing payment for a positions, that's most of the time happened. So cash payment, let's say the 95 rupees only processed to the actual account, and the 5 that goes on a suspense account. Why? Due to technical issue. And that balance you can see on a suspense account, and that break also we call suspense break. Here that you can see the break. So that comes under the investigation. Then even you can check the funds mails as well, or that the counterparties mails as well. Accordingly you can start to do the investigation. Okay, then after that you realized, okay, so this particular 5 rupees has been posted to the suspense account, and that's the reason there is a break in suspense account as well. So what you can do, you can reverse it from the suspense account, make it zero here. So it means debit, post the debit entry for a $5 on a suspense account, and just credit here in the 5. So that the extra, so it will be like 95 plus 500. So the fund hedge fund statement will also match, and the similar way in your system also, in a corporate action system also, your break will wipe out. That will be cleared eventually. Here you need to post the manual journals, and once the corporate actions team they correct it, your system will match automatically. So the point is, you may expect from a fixed income side, you may expect questions on this accounting two entries. What would be the accounting entry for accrued interest? And how we do the accounting? If you're doing the accounting, then we accrued the interest payment, then your accounting entry would be accrued interest account debit to interest account credit, and if cash received, then the accounting entry would be cash account debit to accrued interest account credit. And after that, let's say you are transferring that amount to the P&L, then accrued interest account debit to profit and loss account credit. The amount should be, let's say, the corporate action analyst, they have corrected it, so now we have a correct cash, so that you can transfer to the P&L account credit side. Right here, your accounting will be done for a accrued interest payment, and the similar will be applies to the dividend as well. Once the stock pass the ex date, then as a fund accountant, they accrue the dividend in their system. Once the ex date pass, then you accrued the dividend in your system, where you may expect question, right? Just replace the accrued interest word and put the dividend name. Simple. Wherever you see the dividend accrued interest name, just replace it. Accrued dividend account debit to dividend account, and then the cash account debit to dividend account, and then again accrued dividend account debit to profit and loss account credit, because both are the part of P&L. Both will be transferred to the P&L. And apart from P&L, where we can post, if you're preparing fund flow, there also we post it. Interest income, which is an inflow that you can record on a fund flow statement also, right? Interest income from fund of funds or dividends, right? That is a part of the income. And income, it means that is an inflow of a fund that you can record. This applies to the dividend as well. And apart from that, you can update that on a P&L as well. And even that will impact on a cash flows. That was the income statement, and this is your fund cash flow statement. Cash inflow, cash outflow. Dividend received, inflow of cash. Interest received, inflow of cash. If you purchase something, that is outflow of a cash. If you redeem the mutual fund units, that is outflow of a cash. Because that the cash, here you can apply the accounting, golden rules of accounting. Simple. Debit what comes in, credit what goes out. Debit the receiver, credit the giver. Debit the expenses and losses, credit the income and gains. Okay. I think I think we should stay here, because in a one session it will be like overload for you as well to cover this. Okay. Yeah, tell me. See, in every corporate action process, they have set up a process. Okay. If let's say you have processed the payment for XYZ corporate action, like let's say for a Google company, you have processed the payment. But after process, See, you will receive payment on a control account that will be set up, that we call control account. Let's say you have received 100 securities on a control account. For a cash, there would be cash account as well, firm cash, firm safekeep account that we use to call the name or firm account. If it is a cash dividend, then it will receive. So means agent will make a payment to you on your firm account, and if it is a stock payment, you will receive that on a control account. It's a name of control. It means so every entity they will have their own control account where they can ask to process a payment to you, and once they receive the payment, their cash team they actually process to the different stakeholders or investors and all. You have received stock payment, which is this, and cash payment, which is this. These are the investors. A, ABC fund, JP Morgan fund, or any pension fund. See, this data will be already set up in your system. Okay. Now you have received a payment from the agent, and that is on a control account. That payment is belong to the shareholders, and that you need to pay. You have processed it. After process, payment processed to all three and with the correct amount. And for this, the payment is not processed or projected. The same applies to, let's say, for a two entities, the cash, two entities cash has been posted or processed, and here too, they haven't received cash. There would be two probable possibilities. One, if it is a stock payment, here you can see the 2500 which is still are on the control account. And why this happened? Due to technical issues. Because we process the corporate actions through system, we cannot pay any corporate actions manually. In one go, we try to process it. Okay. And another one is the probable possibility. Here you can see the 5000. Here would be zero, but possibility would be here. Yeah, cash would be here as well, or else here you can see zero, and the fund will be automatically moved to the suspense account, which is 5000. If the quantity is still exist on a control account, that break we call like control break, control account break, that shouldn't be there. It should have processed to the pension fund. Otherwise pension funds will call you, hey, why you haven't processed the payment? And that's the reason breaks teams they start to do the investigation and find out. Your first investigation start with the control account. You need to check the control account positions, that should be zero for that particular security. And let's say if there is a balance, then you can republish the event for that particular account. Simple. Reprocess it through the system. Here you cannot uh, make any payment manually. If the break is on or quantities still exist on the control account, you can still pay the payment through system. These accounts you can put it on hold, and here you can repay it. Just make the status payable and process it. And still, if you are not able to process, then you can process the make the control account zero. Again, control account to debit the control account 2500 quantity and credit the 2500 quantity to the pension funds. So they will have this amount, and then so in both the systems you can see that your break will be resolved, and this amount also gets zero, and that should be. And in case of cash, there will be, let's say if you process even today, then tomorrow you can see the report, you can pull the reports for funds and accounts. You can see there's two accounts are unpaid, and a similar balance or breaks you can see under the suspense account for that particular securities. Let's say for Google, on the Google ISIN, you can see the breaks for a suspense amount, and which is for 5,000. Then you can check in the events. Okay, so for E and EBC fund, the fund has been processed correctly, but for this two not have been processed correctly. Then what you can do, you can debit the 2,500 from the suspense account for a JPM and a pension fund, and credit that here to the JPM and pension fund. It's a manual process. You need to manually process that. So you can create a journal entries and process it. So here you can see the four breaks. One is control account, one is that is suspense account break, cash account breaks, right? And sometime this payment can be processed. Let's say here is the zero, but here the payment has been processed with this quantity, means extra payment has been processed to them. This applies to the cash payment as well. So you can check, reconcile. Otherwise, the JPM or pension fund, they will escalate to you. Okay, so these all 3 to 4 breaks you can see with the cash and stock, but the main category of breaks should be only to cash and stock. And what about if you have received extra payment? If you have received extra cash payment, then you can investigate, but meanwhile you can transfer that. If it is a cash payment, then you can transfer to the cash suspense cash account, because for every currency there would be a suspense account, so you can park there, you can credit the funds for on a suspense account for a time being, and once you have a confirmation, then you can reverse it, right? And in case of in case of stock, you can see all these accounts will be provided to you and would be there in the system. Don't worry about it, those are just technical words. Okay, every firm they have their accounts. In a training they provide all these accounts to you. Facility account, facilitation, that you can say. This would be for a stock. If you have received excess of stock to you, let's say 2 quantity, 3 quantity, meanwhile you can process that quantity to the facilitation account. It means transfer to the facilitation account, because we cannot keep that quantity here. Let's say we have received, but we are only entitled to get this amount, 10,000. We have received extra 2. So extra 2 for a timing you can transfer to the facilitation account, do the investigation, reach out to the agent banks, and after confirmation, then you can, then the agent bank, they will reverse it from their end if that was a missed from their end. And if that payment received for a something, let's say that for a JPM and all, then you can process that manually from suspend facilitation account to this investor account. Sometime that also happened. Apart from that, you can see the types like write-ups. Sometime what happen, if the corporate action value is less than $5, let's say the dividend amount is less than $5 dividend amount, I'm saying, then in that case you don't need to wait for a payment. you can directly process it, and from a suspense account you can process that cash payment to the all the counterparts. But if you process the payment, then the ledger will be created in the system. Then how you can match it? Then you can post that difference $5 against the write up. So it means you can create a manual entries, create a statement. That statement we call write off, and this should be once you pay the dividend in the system that create a ledger. So $5 you can match it in the payment system. But later on, definitely, because every company they process the payment, whether it is a small or large amount, that's absolutely fine. Hello, are you with me? And the last one, which is the tax break, this applies to the stock as well as cash. Sometime you received payment with the tax and sometime without tax. If the event type is taxable and if you have received a tax payment, so that tax rate will be given in the MT564 and MT565. Payment should be received as per that, right? Let's say if they have mentioned 15% tax, only 15% should be applied. But apart from, you can see the tax has been applied, which is up to 20%. So that will trigger in a tax break. You need to investigate, find out, and you can reach out to the who have sent the payment to you. Simple. This was all about break. See, if you want to be a pro in a break resolution, you should think from the scratch what you are doing exactly. Let's say you have processed the payment, and if it is a cash payment, there would be two possibilities only. One, the payment has been processed, excess payment has been posted to the some accounts, or else the payment has been processed to the suspense account. That's it. Then you can check the suspense account statement, and definitely there you can find the legs, or else the balance should be remain in the firm's account. So you can check the firm's account. So we start from the basic and then apply the rule. Check the suspense account, check the control account, check the firm account. Okay, check the tax, then check the amount that you have received, check the other different accounts. And somewhere definitely you would get a late for that particular break, and then you can process it manually. So have you worked on this any kind of breaks and all, or no? Okay, so we have worked on a core break resolution part. Was a similar Okay, was a similar things that whatever that I have discussed? Okay. Yeah, in a system, see, there would be a number of scenarios. I can give you the pick that the basic structure of a breaks, right? But that wouldn't be easy like this. I know that. Where required niche skill set to find out the lakes and all. Let's wash wash breaks that you can. So wash book, it means intraday trades. We cannot process the corporate actions for wash accounts and wash account positions as well, because those are intraday positions, short positions that you can say in short, or intraday positions. We only pay the dividend and all to the long positions only. Apart from that, if you see conversion, any wash account, suspense, blah blah things, we cannot process. That is, yeah, that's because why will process the payment to the suspense account? You tell me. What makes sense to pay the dividend to them? That should be received. That should be received. And if unfortunately if they get the dividend we called manufactured dividend. Here you may expect questions. If they get a dividend, then what is a manufactured dividend? Let's say if you are doing the intraday trading and you are eligible for a dividend, this also happened in some cases where if there is no original owner and you are with the securities and you are entered into intraday positions, then still you may expect the dividend, and that dividend we call manufactured dividend, because that dividend generated through short trading activities. There are a number of terms. Okay, this is like never ending discussion. There are a number of terms, a number of, it means it will take more than 10 hours to discuss. There are lots of things. We can only cover the, which is important to know the structure of a different processes and how you can relate with the fund accounting, as well as how the corporate action analysts they do the work. Which one? Sorry, which one? See, for a reconciliation, it's very simple. When you say the See, first of all, try to rate the type of a corporate action. What they are saying, replacement. Let's say this is you. Let's say the reverse split event. When you do the recon, this will be old positions. This will be new positions. If the ratio is 1:1, then you can match against. Let's say ABC is holding 2,500. Then there should be a new position which is 2,500. This applies to all holders, security holders. And let's say the ratio is 1:2, then here the position should be doubled. New would be credit, old would be debit, old would be debited, new would be credited, and in a recon also these two balances should be matched. If you do the sum, this should be matched. If there is a discrepancy, then you can do the investigation. Here the ratio is same again, 1:2. For a 1 volt shares, you're getting two new securities. So you can pull that or export that in Excel, check the old positions, get new positions, and check the ratio. This old positions that will be debited from a different security, and that will be again debited from a different security, because old security also will delist. This entire securities will be credited on a new line. That's also happened. In a reverse split or stock split, there won't be much. But in case of UK reverse split or stock split, you can see the a number of things, because those means in a live market actually we capture the positions and pay it. So sometimes if you capture the positions, so you won't be able to capture the positions properly if the market is live and all. So that happened. Dreep. Okay. See, dream. I have also so many dreams. Okay, dreams. There won't be much, challenges to process the dream. But if there are different currencies, because in a one event you can see different multiple currencies, and that event also like if the event is cross border, you can see the number of challenges there is also, and that I have seen with the South Africa and UK. Right. So South African country they will also charge 15% tax. UK government will also charge 15% tax, means double taxation will apply to the event, and that payment will receive to us. But that shouldn't be happen eventually. That's the reason there would be a treaty agreement in place, right? and then you need to do investigation. Then after investigation, then check the payment, and in that also, let's say only payment that applies to this SAF currency, means South African currency. Then the remaining event means partially event you can process, and that part you can keep it on hold, and then later on do the investigation, and after investigation, once you receive, then you can process it. So it's like a very lengthy process. Was that the same process that you have done? Yes. And the one more important, if you say the current security bond, or whether it could be this normal equity, right? If there is a corporate actions which is bankruptcy, insolvency, or redemption, then they won't be able to pay anything to us. So it means the security value would be zero. So there will be a direct impact on a net asset value of a fund in case of default event happened. Okay. Default, it means, let's say you took a bank loan and now you are saying I'm not able to pay because I lost my job in this pandemic. So you declared yourself as a default. But for a bank, it's a liability. Now that the liability value means negative value, they will have to record it. So you're not going to pay anything to the bank. But yes, actually, it's a liability. See, that is a money from the deposit that the deposit holders. What makes sense? If you deny, then they will have to pay from their pocket. But yes, if the bank declared themselves as a yes, now we are at default, we don't have anything, then the depositors' fund would be in trouble. Then their savings would be in danger. So if this happened, then your securities will get impacted. Okay. So with this,